Oil starts the week with more upward pressure after jumping over 7% on Friday as Israel renewed attacks on Iran and retaliation over the weekend. The developments will overshadow key central bank meetings this week, set to hold clues for further rate moves. That's coming up in our 5 Things in 5 Minutes on Monday, June the 16th. And then in our deep dive interview, ANZ Head of Asia Research, Khoon says while front-loading of Asian exports has supported trade numbers to date, the surge in activity is set to ease.
New export orders tends to have up to 3-month lead on the region's exports. So the fact that it has fallen quite sharply in the last couple of months is telling us that we could be sort of nearing an end to the front-loading activity.
But first in 5 and 5 with ANZ. I'm Alex Tarrant, in for Bernard Hickey. Markets were rocked on Friday by news Israel had launched attacks on Iran, with back-and-forth retaliation through the weekend. ANZ Group Chief Economist Richard Yetzinger says the oil price looks set to rise further than Friday's 7% jump, which will come in a week which had been set to be dominated by key central bank meetings.
The Fed in the US, the Bank of England, the Bank of Japan, no moves expected from any of them, but yet lots of events which have quite important implications for the output, even if it's not always easy to define. The political demonstrations in the US and what's happening domestically obviously feels quite important, but hard to pinpoint exactly what it means for economics. The G7 meeting, I think a lot watching for clues to see what we might glean in terms of the potential for any sort of trade agreements or which way Trump's leaning in terms of his favour towards particular economies. And then obviously the awful and worrying developments in the Middle East. And it's not just an oil price issue, although there clearly seems to be a premium back in the oil market, but also, of course, what it means for the stability of the region.
The S&P 500 closed down 1.13% on Friday. The 10-year US Treasury yield was up 4 basis points at 4.406%. Gold will open the week at $3,452 an ounce, up 1.5% on Friday, while West Texas Intermediate futures closed up 7.26% at $72.98 a barrel. The US dollar index was up 0.27% on Friday. The Aussie dollar starts the week at 64.88 US cents. It was down 0.7% on Friday. The Kiwi was down 0.97% at 60.11 US cents. Number 2. Oil prices look set to rise further after the weekend attacks. Here's ANZ Senior Commodity Strategist Daniel Hines.
I don't think that the risk that the oil industry now faces is fully priced in. Certainly at the end of last week, the initial attacks didn't target infrastructure. And while there was a heightened nervousness about what the latest in Middle East tensions would mean for oil, the lack of any attacks directly on its infrastructure resulted in a slightly more muted response. So I think the news over the weekend that we saw an attack on the gas field in Iran just ratchets up the risks that the energy sector will suffer significant disruption. And I think we're likely to see oil prices rally even further when they open this week.
Number 3. Daniel says it's not only the oil market that will be affected when trading reopens.
Certainly, the attack on the gas infrastructure in Iran will see natural gas markets even more heightened than oil this week. While Iran is not a major exporter, in fact, the gas field that was attacked was basically only supplying for domestic needs, it does obviously raise the risks that the natural gas market, the LNG market, will be impacted in some way down the track. So, this clearly is going to affect the broader energy markets.
Number 4. Even if tensions do de-escalate, prices won't fully fall back to where they were.
I suspect this latest event is a bit of a watershed event, and I think there is clearly concern that the Israel-Iran conflict could broaden despite, I suppose, any potential backing off immediate sort of attacks. I think there is some belief now that we're in a new world where the tensions are going to remain relatively heightened. Certainly Israel's made that point, and so I think we'll probably see that the geopolitical risk premium remain in the oil market.
Number 5. Back to the key US Fed meeting this week. Richard says the market will be looking for any clues that FOMC members are thinking about hopping off the fence.
The Fed's done a great job in the last few months of being very clear and saying we've got one leg either side. There are some risks to growth, but there are also some upside risks to inflation. If they do give a hint that potentially they're hopping off the right leg, that they're less worried about those upside price pressures because of tariffs, I think the bond market will take that and run with it pretty aggressively to price in more Fed rate cuts.
Richard Yetzinger there. Now in our deep dive interview, ANZ Head of Asia Research, Khoon tracks the front-loading of Asian exports during the 90-day US tariff pause and looks at when that surge in activity may drop off.
Trump's Liberation Day tariffs were announced in April, but there was a suspension following that, and a lot of businesses were taking advantage of the tariff pause to front load or bring as much products into the US as possible, because who knows what kind of tariff rate would apply following that 90-day pause. So this front loading activity has been reflected in Asia's export numbers. It showed a strong growth momentum, with exports picking up in April, and for some of those that have reported May figures, they continue to be quite strong. So this front-loading activity is helping to shore up the export numbers and will support the region's growth in Q2. But not every economy in the region is benefiting from this front-loading activity. The one that stands out as bucking the trend is South Korea. Korea's exports actually weakened in May, falling by 1.3% year-on-year. And South Korea's exports to the US also fell by 8.1% in May. And this is largely because part of Korea's exports to the US are subjected to sectoral tariffs such as cars and steel and aluminum, which the other economies in the region are not subject to that. So that's why South Korea has not benefited at all from this front-loading activity.
We've had some data out of China as well, and it's interesting looking at their overall export sort of performance versus their exports to the US. Just walk us through that. What's holding up that overall performance?
China's exports to the US fell sharply, as you would expect. So for the month of May, China's exports to the US fell by 34.5% year-on-year. And that's because of the escalation in the tariff rate. At one stage, the US applied a 145% tariff rate on all Chinese products. But despite the sharp fall in China's exports to the US, China's overall total exports actually continued to grow, more modestly, but still positive growth of 4.8% year-on-year in May. Now, the main reason for that is, well, China's exports to the US has fallen sharply. It's been more than made up by an increase in exports towards other Asia, particularly Southeast Asia and North Asia, and also to other parts of the world as well. So part of that, I think, reflects the front-loading activity that is benefiting other Asian economies. And whilst other Asian economies are ramping up exports to the US, they do need more intermediate components as part of their supply chains, and a large part of that comes from China. So China is indirectly also benefiting from the front-loading activity of the other Asian nations as well.
I guess at some point front-loading has to end. So how long can this strength for those that are seeing strength go on for? And what signs are you seeing in sort of leading indicators of whether this will continue into mid-year?
The May export numbers that have been reported by some economies so far suggest that this front-loading is still very strong in May, and possibly we'll probably see some of that spill over into June as well, just ahead of that 9 July deadline for when the 90-day pause ends. I think we'll probably start to see payback from the month of July onwards, and this is also sort of hinted at by the recent sharp declines in the PMI new export orders indicator. The new export orders tends to have up to 3-month lead on the region's exports. So the fact that it has fallen quite sharply in the last couple of months is telling us that we could be sort of nearing an end to the front-loading activity. Probably we'll start to see the export numbers from the region start to slow and even fall in the third quarter.
Khoon go there. I'm Alex Tarrant, in for Bernard Hickey. That was 5 and 5 with ANZ for Monday, June the 16th. Catch you tomorrow with how markets reacted to those Middle East tensions.
This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.